Well, Tesla cut prices once again, and once again, nobody is discussing what we're going to discuss today in regards to these price cuts. The hidden impact is incredible, and I'll be honest, guys, even the bulls are getting it wrong. But it's also going to have a massive impact on the stock price, both short term and long term, so we need to discuss that here today. I just ask that you gently tap that like button and consider subscribing too. It's super easy to do if you like the truth without the hype. And I'm running a flash sale on my group this week, so I'm not going to drag this out, guys. I promise that wouldn't be very flashy of me, or I don't know, whatever the heck the wording would be for that. Just check out the pinned comment if you're interested in 5 free courses, my buy and sell alerts, my watch list with price targets, get access to me, a whole bunch of other stuff. Just check out the pinned comment down there and see if it's right for you. All right, so kind of before we dive too far into this here, I could just kind of want to set the table right here and kind of lay some things out for you. And let me be very, very clear about this one point. Tesla is the only car company that has the margins to do exactly what they're doing. Nobody else does. It's ridiculous to think anybody else could do it. I'm even talking even in the EV space, even with some of our other favorite EV plays. Nobody has the margins like Tesla does to do exactly what they're doing right there. I would love to see somebody try it. Basically, a lot of companies are already losing money on their vehicle. So sure, go ahead and cut it into that negative margin even more, whatever the heck the term would be for that. Doesn't matter. The point is, Tesla is the one that can do this and still make money on their vehicles moving forward. And oh, by the way, I think this is their 5th price cut since January on the cars and such. So again, this is one of those things. Tesla is in a very unique position to do this and to absolutely continue to take market share, continue to drive demand, continue to do all the things that they are doing and executing at a high level there. So ignore the noise, guys. When you start hearing about other things and just everything else that kind of tends to go on out there around Tesla, just be very, very clear about this. Tesla is the only one that can do this. Everybody else trying to do it or thinking about doing it or talking about doing it is just, they're going to bleed out money is the point. So they can't do it. Tesla's the only one that can do it. Now, the hidden impact of all this is absolutely beautiful for long-term buy and hold investors like myself. And hopefully you guys here, if you watch my channel, that's absolutely what it is. You'll find it beautiful as well. But I got to say, that's not exactly going to be true for the stock price, and let me explain exactly why. First off, this proves that Tesla can absolutely outmaneuver anybody in the auto space, period. Doesn't matter who they are, they can absolutely outmaneuver them. I mean, you want to do a price war? No problem. They can do a price war and still print cash. That's okay. So if you guys want to try that, go right on ahead. Tesla can absolutely handle that. Oh, record inflation? Well, we actually saw that last year too, and they just raised the price of the cars. No problem there, and it kind of took care of that problem altogether. So, the increased cost of materials and production, everything else that kind of came along with all the craziness after the supply chains reopened or kind of reopened and all that sort of stuff, no problem. Tesla just increased the price, and guess what? They sold every vehicle they had. What do you know? They have that sort of pricing power. Need more cash? I mean, Tesla can play that game too, right? They can pretty much, they can pretty much pay off their debt anytime they want. They have plenty of cash. And if they want to raise more cash, they have a variety of ways they can get out there to actually raise that cash. So again, it's not a problem. They don't have to do what all the other automakers have to do in order to raise cash. So basically, they can outmaneuver anyone, any strategy. They can implement any strategy. They can do so many things that the other automakers just can't do, which of course is beautiful for us as long-term buy and hold shareholders. And these price cuts kind of begs the question, are they paving a way for even more production, even more vehicles coming off the line that we even think they're going to do? I mean, you think about it, just a quarter ago, everybody was talking about how the 50% growth rate was completely dead. And now you kind of look at it and you kind of go, wait a second, they're producing a lot of cars, they're cutting price, which of course is going to increase that demand. Are they gearing up for a significant, basically kind of an explosion in production, which of course means that, they're going to have more demand for that product with these price cuts. So to me, I don't think the 50% growth story is gone at all. If anything, these price cuts may be lining up for an explosion in production and therefore an explosion in that growth rate, basically being able to get right back on track to that 50% growth rate that they want to hit. So to me, that's kind of almost where I kind of feel this kind of tends to move. And maybe that's what it's pointing towards, which again is a huge positive for us as long-term shareholders. I mean, keep in mind, even the bullish guys were saying, well, maybe the growth rate's down to 40, maybe 30%, something like that. But I can't imagine that's what the case is. I think this is all lining up for a much bigger plan. Elon doesn't plan that way. He plans on a much larger scale, years, decades into the future and such. And I just feel like that maybe this is kind of a precursor to a ramp up in production to where they're going to have huge, production on the back end there and really be able to get us back on track to that 50% growth rate. But heck, even if we only hit the 30% one, is that really that bad? I mean, I honestly don't feel that's that bad. Which all of this kind of brings us to the impact on the stock and what these price cuts are going to have an impact on the stock. So let's just kind of rehash here for a second. There's a lot of folks still negative on Tesla stock because, well, Tesla stock's beaten down, right? I mean, you saw it when it was at 100. I mean, even the bulls were flipping to bears and everybody was a bear on Tesla whenever it got beaten down to around $100 or so. It's just kind of the nature of the market and kind of the way human emotion works in these type scenarios and such. But as the stock prices started to rise, everybody's kind of back on the train again, which is great. I'm not knocking folks who got off the train and got back on the train and such like that. But what I'm telling you is thinking a company's execution has anything directly to do with the stock price at times sometimes can mislead you in a large direction. There was nothing Tesla was doing that showed you that they were having issues with production, with execution, with anything else. There was a lot of other external factors that were going on around the stock that were creating that downward pressure on the stock itself, to include the noise around it all and to include everybody flip-flopping and all that sort of stuff like that. But underneath, the execution was going right along as planned. And that's kind of what happens in these type things. Emotions get involved. People get emotional about the stock price. Same thing. Whenever it was at 400, they were executing wonderfully. They just weren't executing at $400 per share wonderfully at the time. It just pushed the valuation to a crazy level and such. But again, because emotions, you feel good whenever your stock's at 400, right? If you own Tesla and it was up at 400, you feel really, really good about it. Or you're feeling FOMO because you don't own it yet and it's going to the moon and such. So those are all emotions that end up tricking you. Tesla was executing, just not to that level yet. And I flip-flop that on the other side. When it's down at 100, Tesla's executing, but absolutely not poor enough to where, I'm sorry, not poor enough, but anyways, they're executing, but the stock price just wasn't reflecting what they were doing to the downside. So it applies to both the positive side and the downside. The stock price normally, in a lot of cases, especially in a stock like Tesla that's so volatile, is not going to reflect what they're actually doing underneath and such. So you got to kind of pick and choose those times and not let your emotions get a hold of you and understand, is it an opportunity or is it a time for me to wait? And, obviously in the case of it being, at 400, that was a time to wait. And when it was down around 100 or 200 even, I'll be honest with you, 185, 150, 128, whatever the case was, that was an opportunity and a reason to start buying there. Not because of what they were doing, but because of where the stock price was at the time relative to what they were doing. Basically, don't let Wall Street dictate whether or not Tesla is executing or not. If Wall Street gets dumb and beats Tesla down and says they're not executing, even though on all the earnings calls it shows that they are executing, that's just Wall Street being dumb. Don't let Wall Street do anything except for, show you that, hey, here's an opportunity because Wall Street's being dumb. And same thing on the flip side too. When Kramer's like, oh, it could go to 1,000 whenever it's at 400. Okay, that may be a time there to kind of cool off too and realize that they may have it wrong there on the other side as well, which as we've seen, that's exactly what they do. But to be honest with you guys and up front, these price cuts are going to hurt the stock in the short term. There's no doubt about it. There's no doubt in my mind next quarter profitability is going to be down. And just wait until Gordon Johnson and all the other bears and everybody else, once the numbers are released, freak out about the fact that the profitability is just going in the toilet. They're going downhill. Look at this. All these sort of noise like that's going to come, which is going to push the stock price down. Now, how much, how far, I have no idea. Anybody out there guessing and, throwing up their proven charts that always prove or anything else like that, they're just guessing, guys. I would be guessing if I put it out there. I'm just telling you right now that when those numbers come in, man, unless something, is put out there by Elon, unless there's something else on the earnings call that really, adjusting guidance up, or something of that nature and such, we're probably going to see a little bit of a pullback if it doesn't pull back ahead of time. We'll see. Sometimes Wall Street is ahead on these things and they'll trade it ahead of time. But we'll see whenever that comes. But I would not be surprised to see that profitability come down and the stock price to come down a little bit in the short term. Now, it may only come down $5. It may come down $50. Who freaking knows? I mean, it's Tesla, right? Anything's possible at this stage. We've seen all kinds of craziness just in the past 6 months with Tesla stock. So it's absolutely possible. But let me give you guys the flip side of this. As a long-term buy and hold investor, this is exactly what you want to have happen. Exactly, guys. It does not get any better than this. And we've basically been given a year now of just gift after gift after gift with Tesla stock. What you want is a company that continues to execute underneath, but Wall Street just stays stupid and keeps the stock beaten down, right? And we've already kind of seen the effects of that, what happens and how much money you can make when those type scenarios play out, right? I mean, if you were buying with myself and a bunch of you guys out there in the $80, $90, $100 range for Meta stock, when it was just beaten down for no ridiculous reason at all, how much money have you made just in the past 3 or 4 months since then? I mean, it's an incredible amount of money that was made, basically multi-year gains were made right then and there at that time because Wall Street got stupid. And think about this. What about if Wall Street would have given us that price for 6 or 8 months or maybe a year? And the same exact thing happens. Mark Zuckerberg comes to his senses and goes, all right, we're going to pull back a lot of that money on the metaverse. And we're going to, continue to, become more profitable. We're going to cut some employees. We're going to do all these sort of things that I told you back then. Hey, they could easily just flip the switch and, they were already printing money anyways. They're printing money even despite, just lighting money on fire with the metaverse, which is kind of what they were doing. And they were lighting billions of dollars a quarter on fire. They were still profitable. So what the heck do you think happens whenever they finally just figure out, hey, this isn't worth this, or we just want to become more efficient, or whatever the case was? They had so many different levers to pull to flip that narrative. And oh, by the way, Wall Street beat it down to like a 7 or 8 PE, that it was a slam dunk, no contest, some of the easiest money I've ever made in the stock market. Now imagine if you got that chance for 6-8 months a year. So every time your money comes in and you could invest, you were investing some of that money into meta stock, or Tesla at 100. Let's say Tesla stayed at 100 for a year. Same type scenario there. You're able to jump in there and continue to invest whenever that money comes in, whether it's, each paycheck, maybe it's just a couple $100, but being able to buy 2 shares of Tesla at a time, as opposed to having it run up and you only being able to buy, half a share or a quarter of a share. If you have a big run in Tesla stock, there's a big difference there over the long run in regards to you, how much money you're going to make on that back end. Because 3 to 5 years, Tesla should execute. And if they execute the plan, the stock price is going to be a lot higher then, and you're going to own a lot more shares at a lot cheaper cost average than you should have gotten if it wouldn't have stayed beaten down. So for me, this is exactly what I want as a long-term buy and hold share, long-term buy and hold investor. I want it to stay beaten down. I want the narrative that I hate to say stay negative, but I want it to stay kind of, we're kind of unsure, what's really going on there? What are they doing? Whereas opposed to, on the flip side of that, Elon's making it, I won't call it completely obvious, but he's kind of slapping people in the face with, hey, look, this is my plan. This is what I'm doing. This is what we're executing to. Hey, we keep hitting our marks, sometimes a little slower. Sometimes we're 6 months or a year behind what we thought we were going to be able to do it to and such. And I'm not talking about his ridiculous predictions that kind of tend to grab the headlines and such. I'm talking about executing this year. They're going to execute this year to exactly what they planned. Not perfectly, not everything great, not everything, to perfection and such, but they're going to execute to it. They're not going to be this huge, dip in business or anything else like that. At least that's not on the horizon right now. Now, of course, something could change. And if it does, we'll come right here and I'll make a video for you guys and we'll talk about it. But for right now, as a long-term buy and hold share investor, this is exactly what you want to see. You want to see your stock get beaten down, and you want to see it get beaten down for reasons that I know, man, they could just flip that switch the other way anytime they needed to in order to do this. And he's gaining market share. He's gearing up for more expansion. And this is exactly what they need to do in order to execute to that vision. So for me, there's absolutely nothing to worry about here. This is exactly what I want. And I honestly don't know why more folks aren't taking this angle on it and such. Maybe they have. Again, I'm not the biggest YouTube watcher in the world, but from the videos that have been sent to me in my group, I haven't really seen it yet. So hopefully this all, was helpful to you guys. And remember, if you want to learn how to do evaluation, see my buy and sell alerts in real time, get videos like this, 3, 4, 5 times a week, tons of exclusive videos. We got live Q&As you can do with me. You can slide into my DMs if you want to. We got courses, all kinds of other materials in there, the best Discord out there. Make sure you check out the pinned comment down there and check out the flash sale and see if it's right for you. And click here to see exactly which stocks I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.